From Bitcoin, blockchain or distributed ledger technology to cryptocurrencies, tokens and initial coin offerings, it seems everyone involved has something to say, but can you really trust their advice? One man's had enough of weasel words and charlatans and is ready to give you impartial, independent analysis. With digestible blockchain bites, ICO analysis and need-to-know news on cryptocurrencies, author, speaker, transparency and clarity advocate and award-winning software innovator Barry James brings you Radio ICO.
Hello, this is Barry James again with Blockchain Bites, and we're going to have a discussion today about the recent musings from the Bank of England, the mother of all banks, who have put out in the public domain the kind of their preferred way forward in terms of cryptocurrencies, slightly more nuanced than the options to embrace, isolate or regulate. And I've gathered with me today 2 or 3 of the leading brains in the area. So I'd like to welcome, and maybe you guys would introduce yourselves a little bit. Mariga from Canada, who has long been involved in the development of cryptocurrencies and is helping advise regulators both in Canada and around the world. And Thomas Power, who is one of the founders of the whole digital world here, particularly in the UK, and let's say was doing social media for business before anyone knew such a thing was possible or existed, and well before Facebook, and has been involved and a leading voice ever since. Welcome both. Would you introduce yourselves, please?
Hi, Maniga here. My interest I got drawn into the whole Bitcoin and now blockchain and cryptocurrency space in 2013 when I helped set up the first Bitcoin ATM in the world in Vancouver at the Waves Coffee Shop in Smythe Street. And the rest is history, as they say. I've since then done a report for the Senate of Canada around digital currencies and their status. And they held off on regulation thanks to that study because they felt they didn't want to kill innovation. It was not a systemic threat. And they felt that Canada could benefit from all these new developments. Since then, there's been the Ethereum launch, following hot on the heels of Bitcoin. And I was involved in advising them to go and set up in Zug, a neutral jurisdiction for their global play. I've since then also become chairman of the Blockchain Association of Canada and conducted the first blockchain study in Canada for 4 ministries, investigating how we could draw investment, entrepreneurs, and nurture this ecosystem Canada-wide. So that's just me in short. My long past history was working with Barclays and Vodafone internationally, but specifically in Africa.
Great. And Digital Futures is your business. You're one of the co-founders, I think.
That's right. I'm a co-founder and CEO of Digital Futures, and one of our latest projects, which we just did a soft launch announce in the Caribbean, in the Bahamas at the Polycon conference, is an integrated cryptocurrency bank or crypto-based bank and exchange, and invested a tokenized asset investment management fund, which we wish to roll out globally, but start in neutral jurisdictions and tokenize these assets for investors out of the crypto space, but increasingly 20 plus jurisdictions around the world that we deem ready to start playing in the new crypto asset economy, if you could call it that.
Great. And Thomas, you're one of the co-founders of Team Blockchain here in the UK, but global in scope, I guess. Would you just tell us a bit more about your background and how you kind of came to be there?
I'm a director of 7 different companies, 9 spokes down in New Zealand, Team Blockchain up in the UK, Business Cafe with Penny, various different organisations. And the thing that's caught my attention with blockchain is the tokens being used by the brands. And when I look at the now 1,500 ICOs that have been born, for better, for worse, I'm working on the assumption that there'll be at least 10,000 ICOs, token codes, crypto codes, whatever label we want to give them. I'm working on the assumption that 99% of them will fail, like the .coms. So .com is .coin or .coin is .com 20 years later. But the 1% that make it through will birth 100 big new codes, big new tech codes. And I think those are going to be very attractive to the brands, because most of the white papers I've read, and I receive one or two every day now, are about new ideas and new platforms, which I like. But what I'm interested in is the tokenization of the old platforms, the tokenization of the old brands, the tokenization of the old shareholders, the old suppliers, the old customers. And so I'm waiting for the arrival of the brands. And right now, I believe the conversation is all about education. And whether you agree or disagree with Mark, the SEC, or the FCA, what matters right now is the market is built through education, and then everyone can fight over the standards and regulations. But I do think, in terms of regulation standards, an ICO needs to be treated like an IPO. I don't see a lot of difference between a token holder and an equity holder. I can't see many utility tokens that aren't really security tokens. I think pretty much everything is a security token if you pay money for it and it's listed in a share register, albeit coin market cap register. So I thought Mark was making some good points. I thought he's trying to make the market, and he's basically sending out a message, guys, be careful, do it properly, use the right lawyers, use the right accountants, be compliant with the market. And he's also at the same time saying, the central banks, we are afraid that we may perhaps be losing control of money. And that is the big fear of crypto tokens. But I don't really think that's going to happen. I think it's just new market layering on old market, like television on radio, like the internet on television. Just see it as a layering up. I think the real great thing about the ICO is it's challenging the VCs. The VCs now have a competitor called the community financed company, the ICO, the token code. The VCs need a competitor. So I'm all big thumbs up for the VCs having competitors.
Okay. So, Manny, would you just talk a bit in response to that, your thoughts on Mark Carney's talk? And do you see all tokens fundamentally as securities?
Well, again, just to pick up on what Thomas said there, if people invest money with an expectation of a return on that investment, and let's not kid ourselves, that's what everyone's expectation is, investing in a token. Be party to a utility or a loyalty program when the platform isn't even built yet, really, I think pull the other one. People are expecting some value or some return, either in the short term or longer term, depending on the degree of speculation, and there's a lot of speculation in the market. I met with some regulators in Canada and the US and London when I worked on a project there at level 39, and pretty much the message that I picked up in the early days, it was not a big threat. It was still seen as a grand experiment. But somebody along the line mentioned that when this starts hitting 5 or 10% ratio of the money in the financial system, suddenly this becomes a systemic threat. And I think we need to appreciate, if you're a regulator or the Central Bank of Canada or Britain or wherever, suddenly this starts popping up on your radar, especially when people are losing money and there's scams and all kinds of things going on. And there's a lot of that. Let's not get into that at this stage. But while I was speaking at the Polycon in the Bahamas, the first security token launch last week, somebody put up the amazing statistics that in the United States, 7 to 10% of Americans are now invested in cryptocurrencies or ICOs or whatever. So now we're starting to see some numbers coming up. So I wasn't entirely surprised when I saw Carney's statement that, suddenly these things are on our radar, and we need to position or declare where we stand with this. And I entirely embrace that we need to protect the average consumer, get rid of these scams. And of course, if there's fraud, money laundering, and everything else that goes with it, yes, we need to follow the rules. In Britain, you drive on the left side of the road. In Canada, we're on the right. It's for a reason. It's to avoid mishaps. I think there we can all agree. And yes, it's kind of going to end up layered on your legacy systems, your traditional banking and money provision systems. So it has to respect those rules of the road, so to speak. Going forward, to what extent or degree do we accommodate this innovation, which is kind of funding itself in a spectacular fashion? VCs and the banks would never have touched these ventures in the past or probably even in the future. So they're kind of bootstrapping themselves. So I think at this stage, there's no harm done because it's money that the people have made off their Ethereum and their Bitcoin historically that they're reinvesting. So that's a good sign. And yes, there's going to be some wins and there's going to be some losses. Also, a majority of startups fail. So I'm not worried by the failures in the system because that's what it takes to get the big winners, as you said just now, Barry. The next Facebook's and Telegram, as you know, is just doing a $2 billion raise to go up against Facebook and Google and other major players in this game. And this is all out of the crypto space. So I think they're doing us proud if they pull it off. And show that our investment has been worth the money. And we need some role models now for the regulator, for governments, and for the community at large that says, this is the way to do it. This is how you can succeed. You don't have to do it under the table. You don't have to steal people's money and run away and buy Lambos, as we say jokingly in the industry. That we can act responsibly, we can self-regulate, and this is the next big thing.
Yeah, and maybe there's things that, and I would say this, wouldn't I? But there's things that we can do in the ecosystem that kind of act naturally to bring about transparency and to make the need for regulation far less and actually could be more effective than regulation. But one of the things that you touched on there, I think, is really something that Mark Carney did talk about, which was the possibility of systemic risk, where from memory, I think the figures he said was that, during the dot-com bubble, and obviously raised the specter of a bubble, I think it was 30% of global GDP. Derivatives at the time of the crash were 100% of global GDP, I think he said, something like that. Please correct me in a moment if this is wrong. But and from memory, he said that currently we're away from systemic risk because ICAs were below 1%. Thomas, you wanted to come in on that.
Yeah, I mean, when you talk about comparisons with .com, at the peak of the .com bust in the year 2000, it was $1.7 trillion at risk. Okay, the economy back then was 50 or 60 trillion dollars global. So the reason it hurt so much was because it was 4 or 5% when it went into pain, and obviously it was already in pain when we had 9/11 the following year in 2001. If you look now, 20 years later, you've got a market of maybe $500 billion in an economy of $100 trillion. Okay, so it's half of 1%. So whilst $500 billion is a huge amount of money, I'm not saying it's not. In terms of risk relative to .com, not even a smidgen in terms of global effect. But in terms of people risking capital on ideas and platform, and as Marnie says, so many scams, Mark is right to warn and caution the market internationally that capital is at risk. And whether you call them a token holder or an equity holder, token holders are risking capital in the hope of a gain. Therefore, anything where you risk capital in the hope of a gain is security, unless it's a utility hidden inside Word or PowerPoint or inside Facebook.
So would you class by that unintended pun, by that token, would you class money put into a Kickstarter campaign in the same way?
You mean when you're getting equity in a Kickstarter project?
Well, no, you never get equity in a Kickstarter project. It's more like a pre-sale, isn't it?
I think it depends whether you're putting that money into that Kickstarter project for capital gain, or you're investing in believing in an idea or a cause or a movement. If it's the latter, it's not security. If it's the former, it is.
Yeah.
But I also think, if you think we've had 10 years, I mean, you need to correct me if I'm wrong here, Barry, because you know this better than me, but crowdfunding has been around for about 10 years. And in many ways, tokenomics, cryptonomics, crypto-codes, token codes, whatever we're calling label of this new market, is very much, to me, an evolution of crowdfunding. And community-built Telegram groups funding new codes, to me, looks awfully like Indiegogo, Crowdcube, one you just mentioned. I just see it as an evolution, but I still think because it feels more like a security than a utility.
Yeah.
Whereas Indiegogo seemed to me more like investing in ideas.
Yeah.
And movements and causes.
Yeah.
And when you read the white papers, these are about businesses.
Yeah. Yeah. For the record, my understanding is that, in fact, having spoken and interviewed J.R. Willett, who effectively came up with the idea and ran the first ICO, I asked him directly whether this relates to crowdfunding in any way. He had to think for a moment, but he said yes, it was in his mind when he came up with the idea. So for whatever that's worth, I do see it as very, very parallel, but a very different form of crowdfunding. And I think there's no doubt in my mind, and I agree with a lot of what's been said, that some, if not the majority, maybe even the vast majority of ICOs are offering an investment for ROI and therefore a security. However, I think the Swiss regulator is right in pointing out that there is another class, which I think is more parallel with Kickstarter and that model, what I call the seed crowdfunding model, where you are buying future service. And obviously it gets a little bit more difficult when some people are buying huge numbers of tokens that they could never use and hoping to sell some of those later. Does that make it a security? That and we're crossing lines here. But for me, there's definitely some clear parallels there. And then finally, the third one, again, talking about the Swiss model, they clearly identify asset-backed securities, i.e. the fractionalization of non-digital, usually physical assets. And I think that is something that's much more like the sharing economy. I don't see much of a parallel there in crowdfunding, except in terms of the ethos and the ethic. It seems to me something really, really quite new. But if you want to both comment on that, that'd be great. But we really ought to come to central banks in a moment.
Sure. Just a quick note there. I think what I did like about the Swiss approach is that they're, by their own words, more liberal in their approach, and they're allowing for some experimentation, which also led to the DAO, the Tezos Foundation, and other mishaps. I think what we're going to need to discover, and you've mentioned some examples there, Barry, of approaches like the C shares and whatever models, is a more robust way in which these funding structures are set up. They don't self-destruct after 6 weeks or 6 months or even a year. A lot of them won't be around, quite honestly, from a recent survey in 12 to 18 months' time, which is a great concern to the community at large, and I'm sure if you're invested too. So, again, these are things that end up in class action suits in the United States and on any public protector's doorstep anywhere in the world. So we need to evolve this. We're starting to see new hybrid style tokens that come with voting rights that could be linked to a stake in the underlying business or in the IP or the asset. We're also seeing asset-based tokenization, which gives some form of security. Again, if you're an investor, are you just holding because of a privilege to use the system or product or service in the future? Or again, is there a return, expectation of return on investment? I personally see convergence around the crowdfunding model with some of those rules, certainly the compliance side, KYC, AML being applied very strictly. We've seen a surge of investment in the space. It'd be a pity if it all gets capped, which happened in Canada, unfortunately. In Canada, they really locked it down to, I think, capped to $10,000 per investor, with a max of $1 billion in total that can be raised within a year. Again, that's not what we ideally would like to see. We want to see it a bit more open-ended, but framed within a self-regulated or regulated way that caps these things and make people accountable. And then there's the big old governance word. What we haven't seen to date is governance. And again, Carney and others, I think, are starting to put their finger on that issue, that if you can't behave, we're going to come and sort you out, if you wish. And there are rules and there are regulations, and it can be either heavy or light, depending on which jurisdiction you sit in. But I'm going to stop there. Thomas, maybe you've got a view?
Just before Thomas does, I just put one other word, literally one word. They could be, two words. They can also be smart or dumb. And for me, a lot of this innovation needs to be about finding better ways to regulate rather than just the old dichotomy. Sorry, Thomas. I just wanted to intersperse there.
Before I begin, I just want to say you speak very well, Marnie, when you go through everything. You frame things well. So nice to meet you in the digital flesh, as it were, whatever is this system. I think, Barry, when you see the number of tweets, posts, comments coming out of the central banks around the world, all the news providers, the niche news providers in the crypto token area, and you look at the number of people that have got a wallet now. David Siegel, I interviewed this morning, he estimated 10 million people had a wallet now, crypto wallets. I thought that was a reasonable guess. If you add up all the exchanges across the world, obviously very hard to determine the number of wallets in China for obvious reasons. But whether it's 10 million or 20 million, it's not even 1% of the available market online. It's a tiny, tiny percentage. But I think what's worrying the central bankers, and quite rightly, is you've got $500 billion of capital at risk. And that's a lot of money. Okay, it's only 0.5% of 100 trillion GDP worldwide. But when people start losing money on token codes, it could become like PPI at the Bank of England, or PPI at the Bank of Switzerland, or PPI at the Federal Reserve. And they can't afford that. And that's going to have to be, all that risk is going to have to be insured. And I think this there's so much risk associated with new codes. As Marnie says, 90% of them fail. Well, I think 99% of codes fail. I don't see any reason why 99% of token code. And if you've got 10 or 20 million people at risk, if you've got $500 billion of token capital at risk, central bankers have got to get the table and say, bring this up to IPO standards. Because we can't have this amount of capital going down. And I've got a lot of time for the central bankers because they're aiming to keep things stable. And this kind of, dare I say, libertarian, fuck you, change the world, do it our way, we don't need the centralized system, to the current world. Well, sorry, I'm not in the libertarian camp, I'm not in the fuck you existing system camp. I'm in the camp of here's a new way to start new codes, here's a new way to engage users and reward and compensate users with tokens. I think the current system, it might not be perfect, but it's not a bad system. We should respect the opinions of the central bankers and give them a chance to voice their concerns, because if something goes wrong, and there are going to be big examples of going wrong, and I'm not talking hacks having been stolen, I'm talking about big codes going down. There's a lot of suspicion around a lot of the big ICO assets last year. A lot of very unusual transactions going on in and around ICO raises within weeks and days before. We can't do it like this. We've got to have it run in a very tightly regulated way,
Yeah.
I know Mark took a lot of abuse on Twitter during and after his speech, but personally, I thought he made some really good points.
Yeah. As you know, Johnny Fry has also responded to Mark Carney's, your colleague Johnny Fry from Team Blockchain, and made some very, very good points. For example, Mark Carney, talked about cryptocurrencies as if they were all Bitcoin, and said 6 transactions a second versus 30,000, when actually those of us in the field know that there are those coming up from the outside that can outstrip the visa system and so on. I think my concern is that it's not about ripping it up and starting again, but there's vast opportunity here for innovation to bring us greater freedoms and greater inclusion. And that's that's part of the opportunity. But anyway, moving on to other parts of that.
Happy with all of that, Barry.
Yeah. Moving on to other parts of that speech. One thing I specifically really would like to have your thoughts, both of you, on is, Mark Carney's preferred path. On the one hand, seemed to be, judicious use of different tools and regulation in various ways to, as he put it, to secure various parts of the ecosystem. But he also talked quite a bit about, the future of what you could call a fiat cryptocurrency, and we've seen Turkey now talk about this, having been against it to begin with, and we've seen other territories. Should that in your view become the norm going forward? What's your vision for that? And should that be to the exclusion or in competition with Bitcoin Mark 2, 3, and 4?
Manny, I'll go first. You go second this time. Okay. I'm interested in the point of view. I love competition, though. Competition makes markets. I don't like dominant players. Don't like this Google, Amazon, Facebook, Apple, all company dominance at the end of 25 years of the web. I mean, they're great companies. I'm not saying they're not great companies. I don't like the full company club. and I'm a big fan of Netflix and all these kind of things. But, so I quite like the idea of a fiat crypto fiat, whether it's Turkey or the UK or wherever. For me, the more choice, the more market, the more competition, the more intense the entrepreneurs have got to be to fight and carve out their bit of market. So I actually thought that was a pretty good idea to make the market even more exciting and more competitive. We all benefit when that happens.
Manny, what do you think?
I just want to kick off by just picking up on what you said, Barry. We're going to have to invent new ways of approaching this. We can't just apply traditional methods to all this new stuff. And taking that into the world of governments and central banks starting to issue their own digital currencies, I think it's inevitable. There's a huge informal global economy sector that operates on micropayments. You simply cannot use traditional cash or Western Union or whatever style payments with huge fees to move money around the world for the right reasons. So I don't know if anyone saw that World Economic Forum using the UK as an example of digital currency was used, like Bitcoin, how it would add 5% to the GDP of Britain. Excellent from the World Bank or World Economic Forum. It could really free up and make less frictionless the movement of cash and payments inside the system. Now, I know people like Carney get fixated by Bitcoin. I think we've moved so far beyond Bitcoin, it's unreal. I've seen demonstrations of 300,000 transactions per second on new blockchain platforms that are emerging and will play in this space in 2018 that are complete game changers. All the obstacles, complaints about the cost of Bitcoin mining and so forth are being remedied or addressed by these new approaches without necessarily wanting to get rid of Bitcoin or whatever. Let all of them thrive in the system. But we might see 18 months from now national digital currencies compete, if you wish, with cryptocurrencies, and maybe that's a sign that the central banks are starting to create a level playing field for them to enter the space. There's been speculation in the community. I agree with you, Thomas. Bring it on. All of these will compete for different sectors or sections of the market in different parts of the world. If it's going to be pegged to oil, like Venezuela is trying to do, or some physical asset like gold, people are going to try that as well. And I think this is all part of the innovation that's still coming. To squash that all with overkill regulation does not bode well. But having said that, probably the largest ICO territory in the world right now is the United States, which is strictly regulated. And I meet my counterparts and colleagues down there who said it's fine. We're going to comply. We're going to work according to the regulatory regime, and we're going to do an ICO and go large. And they are succeeding. So people should not be put off by regulation as such. But we have to push back and say, look, let's create a new space with new rules in which everyone can play, and obviously for the benefit of everyone, and less harm than we've seen today.
Yeah, I mean, it's certainly a new and exciting, but also confusing place. And as McKinsey's have pointed out, the more experience you've got historically, you know, and the heuristics that you have built into your head make it more and more difficult to understand what's going on. I've certainly seen that in regulation and regulators. So the innovation that needs to happen there to give us smarter and better ways of doing regulation. One of the issues I see is that I'm not sure that that's anyone's job right now. You know, who is, you know, motivated or remunerated right now for thinking about that future? And, you know, how could we, Manny, you're an expert in this area. How might we bring that about?
Well, what we've done, and a good case study, which I'm very proud of, is we did a study here for the BC government, British Columbia government in Canada, more than 18 months ago. And one of the suggestions that came up was to start with roundtables, bring all the stakeholders, bring the government, bring the regulator around the table, and let's talk about this. One way to start is, and I like the attitude that they had, is they said, I don't know what you're talking about, what's going on, please educate us, number one. That was music to my ears. If one can start on that basis, that's fantastic. We're all learning, not just the regulator and the government officials. We're all trying out new stuff, but let's do it together. Let's create frameworks in which we can survive and thrive. And no, it's not a sandbox. I think sandbox can be very restrictive, which we've discovered here. It was very disappointing so far. There are people that get locked down for a year and you're not allowed to do anything and you're on probation kind of thing. That's not how innovation works, unfortunately. Then we would not have Google, the internet, or Facebook. So we need new systems with open-minded people coming to the table at the right level, not just spokespersons, but actually invested politicians, officials, and of course stakeholders from the community to have dialogue and look at how we do this together. How do we make, obviously we want to see the ecosystem of British Columbia thrive, we want to see Canada thrive, and probably 20 plus ecosystems that are in play at this stage, invested in this technology, London, UK obviously being another good example. How can we leverage this? How can we build out the skill sets? How can we prepare our academia to embrace this? How do we create standards? Biggest challenge right now, there's so many inventions going on. Banks are confused around how do they connect or integrate with these solution sets, even if they can see benefits. Again, back to systemic risk. So once you step through these models and the business processes involved and the new mindsets that need to evolve from all of this, game on. And we've discovered that here in BC and elsewhere, where we've been able to facilitate these processes. And we're having the same with the Swiss government, with the government in Ontario, in Toronto. I've just been to Colombia. We've just met with the Bahamian authorities at the Polycon conference. We had a pitch from Barbados, the Cayman Islands, while we were in the Caribbean, all waking up to this reality and saying, we want more of the stuff, but the right stuff. And how can we work with you? I think that's the right approach. That's the right attitude. And hopefully we can get regulators in key domains to work with us along these lines. So it's a part we need to step up, and they need to maintain an open mind. And I think that's my appeal to Mr. Carney and others, is let's not choke this off too soon when the systemic risk is still minuscule in terms of past or historical mishaps.
Yeah,
in this case.
Absolutely. Absolutely. And Thomas, you're a leading expert in terms of engagement. I mean, I don't know anyone, can't think of anyone better. And one of the things we'd probably all agree about is that Bitcoin, if nothing else, as a brand, has kind of led, public interest, in this area, certainly over the last few months. But how in your view, what could we do to be upping the engagement with innovation and with, the potential of blockchain from people like regulators, as well as politicians and other key influencers? And I guess you might want to reply to Manny as well.
Yeah, Manny, just the first thing on Manny's point, I didn't see Mark's speech as choking off the market with regulation. I thought that was you'd been a bit extreme. I thought he was making the market by talking about it, and therefore getting people to consider it. In terms of your question about engagement, though, the big issue with all technology, 20 years ago we had e-commerce and we had social media, now we've got blockchain. It's all roughly the same. It's education. And whether it's the Bank of England or the FCA or the SEC or the Ombudsman or whichever organisation, there's not enough education in the boardroom about this new technology. And I think the geeks are pretty poor at selling their mousetraps. They just bamboozle with gobbledygook and buzzwords. And people who are investing capital on boards, organising markets, need things in plain, simple language. And that's not happening, as it didn't happen with e-commerce 20 years ago, as it didn't happen with social media 10 years ago, and it's now not happening with blockchain, tokenomics, cryptonomics, whatever label you want to give it now, and thus people are confused. And when people are confused, they say, I don't like it, it's not right, it's confusing, it's corrupt, it must be a scam, we must avoid this, we must protect people. And it's all it is please give me more information, please educate me, please help me, please be my digital companion, my blockchain companion, my crypto companion, my Ethereum companion, but help me walk towards that. And I think the professional services markets and software engineers don't respect that it takes board members about 18 months to figure out how to use things like Twitter. Right? Just learning how to use it properly takes 18 months. To make a decision on a blockchain strategy, to make a decision on ICO or launching tokens for your customers or your suppliers. These are big decisions. And these people are buried in decision choices right now. And when you have a lot of choice, when you have a lot of choices in front of you and a lot of decisions to make, and you don't understand, you sit on your hands and you procrastinate, and you say everything's terrible and avoid all the bad guys. And that's where we are, and that's a market. And so it's a long answer to saying, Gary, we have to educate the market, we have to educate the regulator, we have to educate the institutions, and we have to educate the board members of these various companies, oldcos and newcos. Oldcos, what it's all about. Newcos, please speak English. Everything is about return on capital employed. Those things don't change.
So I think, even between the three of us, we could probably come up with 4 or 5 different opinions. I'm not sure that that's necessarily a bad thing at this point. But, one of my dreams in this, and I guess we've pretty much run out of time or very nearly, but I'll give you both the last word. One of my dreams in this is I see that by applying old tools, dumb tools rather than smart tools, to because regulation isn't an end in itself. It's a means of making sure that things don't go awry and that people don't take advantage. But building new ways of doing that, that allow greater innovation and greater creativity. I think it's a ripe field, and part of my dream for this is not for that in itself and of its own right, but for creating the tools for smarter regulation, understanding that the key role that transparency can play, I believe, can be transformative. So that's my vision, and it's about regulation. Well, sorry about that. What are yours? Just to finish very briefly, what's your vision for of the potential of this for the future?
You go, Marnie. I'll go last.
Okay. Yeah, I didn't mean for Carney to choke anybody. Don't worry. I think it's good that authorities like Carney start putting a stake in the ground, and create rallying points around which we can have mature debates, but also direction. I think everyone is looking for direction, and it's either going to be regulatory or we're going to discover, as Barry suggested, new ways of doing stuff. What we're hearing out of leading, as far as I regard them, jurisdictions like Singapore, Switzerland, and even Korea and China that I visited recently and met with the authorities there, they're all considering some kind of regime where you will come and submit your proposal for an ICO, and they will approve it or license it or direct you into a certain step process in which you engage with other people's money, because that's really what we're talking about. That's really what the bank and the government is talking about. You're actually working with other people's money. Please behave responsibly. And we call it governance, we call it self-regulation, we call it all kinds of big words in our community, but that's the gist of it. We need to reward good behavior. We need to support innovative regulation that is open-minded, but protect the vested interests without, ending up in a confrontational way around it. And I think really start building out the ecosystems. We did a study here, again for BC, but we've applied it in a number of other jurisdictions where we've been invited to come and consult through Digital Futures, is these things have a lot of moving parts. It's not just the regulator, it's the developers, it's the investors, it's your community at large, it's your compliance people, it's your legal folk, it's your auditors, your accountants, your tax people. Academia gets involved. We're in a partnership here with one of the leading universities in North America. We ran the first summer school for their students in blockchain last year. That's the kind of stuff that I think we'd like to see all over. My appeal to the UK is I was there when the group that took the DLT report to Downing Street made their pre-announcement. It was very exciting. And one would like to see that those ambitions and vision for the future pulls through into something new and innovative for the digital economy, UK and elsewhere.
So a 5% bump in GDP is not to be sniffed at, but it's just the beginning, isn't it? Just the beginning. Okay, so Thomas, your vision, what could this deliver for us?
Manny, you speak so well. Keep being you. I'm very skeptical about the 5% of GDP, Barry, mainly because of the issue with Brexit. And I'm in the Remain camp, not the Leave camp, which I think has been a total shambles, really, ever since the last 18 months. Could it be 5% of GDP over 15 or 20 years? Yes. Yes. To me, the most important thing is that we use the blockchain to renew the old codes, and we use the power of tokenomics to really engage the relationships around loyalty and reward for all the customers that use the various old code systems. And if you like, we've got a mass-scale MRS program emerging for old codes to re-engage customers and reward them. All sorts of things. But in terms of new codes, if we could get 10, 20,000 new codes up and running in the UK around the blockchain, that would be fantastic. And I think never really had that support of government support, education support, institutional support, university support since the mid-90s that we could have now. But one of the weird things about the Brexit situation, and it's happening in Germany as well, is we've got 823,000 vacant jobs in the UK market. Yet we've got 32 million people working. So we actually need another million people working to take up the slack. Yet we haven't got the skills. We haven't got the digital skills for those jobs. So we're actually short of labour, and we're closing the borders. That is dumb. And we've either got to retrain the existing labour we're left with, or let the borders come down and bring people in. And you can't have 5% GDP growth unless you've got the labour to do the work. And we've got a shortage of skilled labour in the UK of 800,000 now. That's before we get on the blockchain bandwagon. And all this nonsense about AI is going to be doing all the work and we're going to be down the pub smoking cannabis, I have to say, is up a trip. If anything, AI is going to create loads more work. And the idea of robots doing everything, is nonsense, utter nonsense. I've never seen that in 40 years of technology. It isn't going to start now. No, I think the biggest problem we've got is getting education into the heart of the institutions where the capital is, where they make decisions, whether that's the government, whether that's the universities, whether that's companies. And until we sort that out, Barry, it's hard to have a vision until people understand the subject. Right now, UK market doesn't understand this.
Well, Thomas, please don't even get me started on the education system, which we might actually have to rip up and start again, or very nearly. So I couldn't agree with you more there. As far as Brexit is concerned, I'm sure we can get at least half a dozen, if not 15 different points of view just from the three people present today, and so on. So that's a whole area in itself, isn't it? But it's been fascinating to hear such diverse opinions and points of view and insights. So time has beaten us now, though. So it's for me to say thank you both. Thank you, Manny, and thank you, Thomas, for your contributions today.
It's a great pleasure. You're welcome.
Thank you for inviting us, Barry.
Not at all. And I look forward to keeping up this conversation. I'm sure we'll be back to it soon. Thanks again.
Hello again. Well, things move fast in this world. And in the last few days, a week on from Mark Carney's speech, the European Banking Authority have announced a plan which is very different and has a very different basis from the one or the vision set out by the Bank of England, which is much more championing of innovation. And the speech from the chairman of the European Banking Authority was very much saying that there are grave dangers in overregulation. So here we are with the Bank of England saying that crypto-assets are not and cannot be money, but they must now be regulated and become a fully fledged part of the financial system nonetheless. Meanwhile, the European Banking Authority say otherwise, and that overregulation is a bad idea. Innovation should be supported and encouraged to flourish. Over the other side of the Atlantic, the SEC are saying that there's no such thing as a token which doesn't look like a security, while the Swiss authorities clearly recognise other kinds of digital tokens, including those that represent services called utility tokens, and those that represent assets. So there's a whole world of difference here, and these different authorities may be used to being the authority and setting the rules without fear of contradiction. Well, we're in a world of contradictions here. What will win out? Well, physics tends to win, and where physics leaves off, Darwinian principles usually cut in. And we're in the era of the reinvention of money. There's no doubt, really, about that one way or the other, certainly not in my mind anyway. And in that world, my money would be on Darwinian principles in this case, and the fact that we now have the capability to do things we never could before in terms of programmable money, online money, and so on. So this will be a global battle, or at least global competition, I think is the way to see it, and it'll be a lot about the survival of the fittest. It's going to be fascinating.
ICO Radio was brought to you by author, speaker, transparency and clarity advocate, and award-winning software innovator Barry James. Get in touch with the programme, put yourself or someone else forward as a guest. Visit iconewsdesk.com. And if you've enjoyed the show, please leave a review. And don't forget to subscribe to get your next insights and interviews from the ICO Radio podcast.